Today's episode is brought to you by Stream by AlphaSense, an expert interview transcript library that integrates AI-generated call summaries and NLP search technology so their clients can quickly pinpoint the most critical insights. Start your free trial at www.streamrg.co/PMC. That's streamrg.co/PMC. This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap Podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome to the Planet MicroCap Podcast. I'm your host, Robert Kraft. Thank you all so much for the support and for tuning in. You can follow Planet MicroCap on Twitter at Bobby K. Kraft. That's BOBBYKKRAFT. And you're listening to episode 217. If you have any questions or comments, please feel free to tweet at me or shoot me an email at rcraft@snnwire.com. And when you do get a chance, if you like what you hear, please rate and review Planet MicroCap on iTunes. It really helps provide feedback for me and spread the MicroCap message. Special thank you to our sponsors for today's episode, Stream by AlphaSense, an expert interview transcript library that integrates AI-generated call summaries into NLP search technology so their clients can quickly pinpoint the most critical insights. Start your free trial at www.streamrg.co/PMC. That's streamrg.co/PMC. And Quarter, whose mission is to change the way people look at investor relations and create a completely new bridge between companies and stakeholders. Visit your app store of choice to try it out, and that's Quarter, Quartr. We are very excited to host our first in-person event in nearly 3 years. The Planet MicroCap Showcase is back in Las Vegas on May 3rd through 5th, 2022 at Bally's Hotel and Casino. It's time to see each other. It's time to network in person. Let's make it all happen in the entertainment and business capital of the world. For more information, please go to www.planetmicrocapshowcase.com. See you in Vegas. For this episode of the Planet MicroCap Podcast, I spoke with Jean Philippe Tissot. He is the founder of Aurauca Capital. We were introduced by a recent guest of the show, Ian Hunter. Thank you, Ian. To get prepared for our conversation, Jean Philippe sent over recent fund letters, and in his 2018 annual letter, he describes quite thoroughly his 3 pillars of investing. I found this quite interesting and nuanced, so we dove a little bit deeper to fully understand his approach. Thank you again for tuning into episode 217 of the Planet MicroCap Podcast, and please enjoy my conversation with Jean Philippe Tissot. This episode is brought to you by Stream by AlphaSense. You can find them at streamrg.co/PMC. That's streamrg.co/PMC. Stream is an expert interview transcript library that is starting to become an integral part to investors' research process. They have a number of interviews on a wide variety of companies, including TMT, consumers, industrials, real estate, and more. Stream provides over 300 expert interviews per week, and 70% of their experts are found exclusively on Stream. Stream is unlike any other transcript libraries. Stream integrates AI-generated call summaries and NLP search technology so their clients can quickly pinpoint the most critical insights. Stream's community of experts and thought leaders partner with Stream to build their professional brands and expand their industry influence. Right now, there are approximately 8,500 plus call transcripts available. For more information, please visit www.streamrg.co/PMC. That's streamrg.co/PMC. Welcome back, everybody, to the Planet MicroCap Podcast. I'm your host, Robert Kraft. You can follow me on Twitter at Bobby K. Kraft. That's BOBBYKKRAFT. And joining me today is a gentleman who was introduced to us from Ian Hunter, who was recently on Planet MicroCap. And I'm really excited to learn from him, his investing philosophy, strategy, and especially his background, because it's really quite unique. So with that, I'd like to introduce Jean Philippe Tissot. He is the founder of Aurauca Capital. Jean Philippe. Thanks so much for joining me today. How you doing, man?
Thank you very much, Bobby, for inviting me. It's an absolute pleasure for me to be here with you.
It's great to have you on. So I want to dig into your background already. Like let's get into it because it's quite unique. You know, you're from Colombia. You're now operating in Europe with your fund. When we were talking offline, you had a really great story about how you ended up wanting to make that move and to pursue your passion. So with that, you know, love to know where your passion for investing began and how you got to where you are today.
Of course. So it's a quite a long story. Let's see. So I'm as you mentioned, so I'm originally from Colombia. I grew up there and I was raised there as well. When I was in the university, in Colombia, the university is 5 years. It's quite long. So I started there as a teenager, and very early I joined a brokerage firm to learn. So we have 10 semesters in Colombia. In the 4th semester, very early, I just started attending a brokerage firm, which for like 9 months, I was just really learning, and I was in different aspects, in different departments of the business. Why I entered there? Because I have always wanted to spend my time on a play or like on something that has unlimited potential, unlimited potential in terms of what you can become or what you can learn. So I didn't like to have any cap on a job. So that's why I entered there. So I mean, investing or trading at the time. So while I was there, so I joined. So it was 9 months across every different department of the company. Simultaneously, I was in the uni. Then I joined as a trading assistant in the foreign exchange desk. That's the place where you trade dollars against the Colombian peso. And that was another 9 months. And then my boss left. And that was the exact moment where in my uni, I was supposed to have an internship, but I had already all this background. And then the boss there said to me, like, if I was ready to handle the desk. That was a huge opportunity because I was extremely young. I joined, when I was 20. So I was very, very young for that. And, that's where I started to see a lot of, because that was, let's say you made the money mostly on the time as with proprietary trading, and you were market making on currencies as well to the clients, but that was very small. But I saw a lot of my colleagues trading Colombian government bonds, and a lot of, let's say, excesses on how much money they can make, but how much responsibility, so how irresponsible you can become as well. And that shaped me in a way that I said, like, I really want to survive. And I was very conservative, and it was a very interesting experience. But then when I was there in Colombia, very young, and enjoying my life. So imagine football, soccer, you guys say that, right? So imagine you're in Colombia in a small football team, and you dream, you say, oh, I want to play in the Real Madrid. So that's basically what happened to me. I said, like, oh, I want to. At that time, I thought that the real wisdom at that time occurred, like, I don't know, in Wall Street or in the main banks in London. So I said, I want to work for a major bank trading in London. I always said that. Just it's important to know my English was really bad at the time. I don't know if it has improved by then, but it was really bad. So I had to leave. And so when I finished my university, I quit completely and I moved to London to learn English, literally just English course. And then I said, like, okay, I need to study a master and all of that. I had this dream, but when I was there, this is crazy. I'm competing with the smartest people I don't know, from India, from China, from all that go to, and I don't even speak proper English. So how it's going to be? So, then I decided to study a master degree, which of course that was in the plans, but I missed out the deadlines how are in the UK. So I ended up in Germany and that was fun. So I ended up in Germany, and that was 2007 actually. And then in Germany, so in my master degree, I had to do an internship, this lasted 2 years. And when I entered in Munich in a major asset management. And that was Lehman Brothers time. So they sent us to back office, and that was not the plan for me, right? So I had to quit as an internship, but I found a job which was a super interesting, which was at Adidas, and I was an intern there in the treasury. And when I joined, it was like October the 1st, 2008. When you had already the results of, I don't know how subsidiaries hedge, and like a lot of subsidiaries didn't hedge properly, and the currencies moved, like, I mean, the dollar or the local currencies moved down. And then my boss taught me how to do hedge accounting and etc. I knew how to trade, and then basically I set up the Latin American strategy of hedging on onshore currencies. Onshore means that you cannot transfer them, like Colombian peso and all. But I always want to go to a bank, So that I lasted 3 years. It was wonderful. Then I ended up having the big exposure, which is your dollar. I did lots of options and stuff. It was remarkable. But then I ended up studying where I wanted to study. Okay, it was the first university I originally planned. Both are really nice, very good. And after I left, literally after I was in JP Morgan for 1 year in London, and then I joined BNP after 1 year in JP Morgan, and there, let's say, was where I really faced financial markets. And after a while, let's say, I was already like handling my capital and different aspects, and I was not that happy with this platitude that I had, that there is the wisdom there you're working with, everybody's super smart, everything is phenomenal, but we are super experts when we're in the sell side on how things operate, how things work, so how to trade or currencies, how to trade options, how everything works, but nobody really knows where the market goes, and everything is short term, everything is, what matters is the headline of today, and I lack this kind of, how can I compound my knowledge? How can I compound? And I didn't.
That's interesting, because you've been doing that for years, right? Like that's
correct.
How you got each job, and yet you knew deep down, you're like, I'm good at this, but I'd rather this doesn't fit my personality. Right? Like it sounds like.
Well, correct. But I always wanted to get there, right? So it's like I didn't know, and I had an experience from that. And then it happened something like, so because I said, like, how I manage capital, I cannot be like this. It needs to be in a way that is very long term. I need to buy stuff when it goes down. It's not with excitement. And it happened that in 2013, we sold a farm that my mother's family had for several generations. And one family member asked me, Jean Philippe, can you please help me allocate my capital? Because you are the expert. And then she said, expert. And I remember that day perfect. So like, what the hell expert means? I know how everything works. Let's say but I have no idea what is going to happen in a year on different assets. That's not possible. And really dawned on me, like, come on, like, I haven't built really good knowledge on this. So what I'm missing? And I said, like, I love reading, I love learning all my life, but I had never read much about, Buffett and all of these guys. And I said, like, I need to learn from the biggest investor ever. So of course, that's very common. That happens to a lot of us. And I went to the library in London and I bought one book. It's over there. And that was a really wake-up call, because when you are in banking, there is a lot of a little bit of arrogance on we know how things work, And when I read this guy, he's really humble, and he's like, it's okay to not know, like it was in banking, like when you are, let's say, in a trading floor and all, it's very hard that you hear people say, I don't know, like people know, like we believe we know, no? And then that was really interesting. And then I said, this is the most successful guy. And then, of course, so it's okay to not know these things. And that changed completely my perspective of things. And of course, now, I needed to, I study everything on finance since my university. My favorite subject was accounting. So accounting, all of that is always ingrained in my blood, so just my work that was different. But so I said, I need to start like investing in companies for the long run. And I started managing my capital very seriously, and capital from a family member then grew to different family members. And that's where I set up a small family partnership. And it became, like I tell you, in the first year that I did that, like completely, right? I learned more than the accumulated knowledge I had and all what I have told you already. Okay. And I was like, oh, this is because, you have skin in the game, you have your own capital at risk. Right. You have to make decisions. So this is a completely different aspect when you don't have that,
Right. I'd like to take a quick second to tell you about this episode's sponsor, Quarter. With Quarter, you get frictionless access to conference calls, investor presentations, transcripts, and earnings reports from markets all around the world, straight from your pocket for no cost. Quarter's mission is to change the way people look at investor relations and create a completely new bridge between companies and stakeholders. The first step on this journey is to let you, the user, interact with the company's content while you're listening. Visit your app store of choice and try it out today by searching for Quarter. And that's Quartr. Now back to the show. So while you were, doing all the other jobs that led to, founding Aurauca, I mean, who were your influences, right? Like, because I'm assuming you partly came to it on your own. Like, I don't love investing this way. I want to do it differently. But were there certain books that you read or folks that you followed that you're like, who are they? Who are your folks?
Well, I can tell you my path because so of course, so many influences. I mean, I brought even some books when it's there.
Come on, let's show and tell. Let's see some show and tell. Let's go.
Well, later.
Later, okay.
No. Let me go with chronologically. Okay. So,
okay, all right.
Of course. So I tell you, I really bought the first book. It was this Lawrence Cunningham with the Letters of Buffett that he puts them. So that was the first book that put me like, wow. And then I went back and I bought anything I could about Warren Buffett. Today, I think I have read anything that he has ever written or anything written about him at that time. That was 2013, 2014. I was really, really focused. I became crazy with this. And of course that I don't like to have labels today because everybody's opinion and perception of a label could be different to the others. But of course it was value investing, whatever that means to you, but it's this kind of sphere. Today I like to be called an investor. So it's more open and broad, but that was, of course, my influence, and for me, let's say, I'm extremely grateful that I went there, and it's been phenomenal. But then, of course, I also wanted to expand the different views, perspective, and all. And one of my biggest influences is Nassim Taleb. So I study a course that he taught. I have read everything he has done. Of course, he has, written from the main books. Some are extremely complicated. These options or mathematical papers that are sometimes hard to completely follow. But
it's way over my head, man.
But he opened a lot of my mind on all what is risk. What is risk. What is taking decisions under uncertainty, and that is something that is fundamental on me, and that also I like, because at the end of the day you make your own painting, right? So you have a little bit of everything. So from Nassim, like from my classmates or all the people who follow him deeply. So because his experience is he was an option trader, and he has made extraordinary, let's say, investments, positions, trades, whatever you call it, on the left side, of the tails, the negative. So when something crashes, and I like that, but on the positive side, right? So I like fat tails that have positive concavity. So convexity. So so I like to be positive in the side of the positive fat tails. Example of that are investments that I don't know, you buy a company's 50 million market cap and end up in 10 billion. That's I'm absolutely fat tail, because it's not normal that you are going to find it and hold it, right? So I like that, but also, of course, I need to respect the unknown, and he shaped a lot of how my portfolio is constructed, I have a lot of influences as well. There is a guy called Anthony Deren. He has a wonderful philosophy on preserving wealth and preserving capital. I'm influenced a lot by him. And all of a lot of young investors as well, who are remarkable, are doing the job, like the people who are taking risks and are making their own decisions. So it's a lot. So I try to learn as much as I can from people who have a skin in the game and are in the game, are there every day working and try to make sure that they want to keep compounding. So I learn a lot of from different disciplines as well, and I want to be influenced by that. That's so we. Gotcha. Lots of that, but that's the origin.
So then, how would you describe then today, as right now, we're recording this February 23rd. What would you say is your investing philosophy?
Well, my investing philosophy is, of course, so let's say, I invest. So the core of the fund and the core of the partnership, what it was and all, is to have ownership in companies, by the possession of stocks, and with the intention to hold them as long as management executes, right? That sounds easy, but it's complicated, because of course the ideal investment is the one that you hold forever, but that's platitude. That's very rare that it happens. Management needs to execute forever, basically, for that. So that's the core of the portfolio. So it's long. So that's the main. And on that, I want to have like a lot of preservation of wealth, as I mentioned. So that's why I have a barbelling portfolio. Barbelling, by that, you know what I mean? Which is like the weight. So on one side, it's very safe, as safe as I can manage, I can have it. And on the other side, I like to explore, let's say, more risky investments, more companies that haven't proven the business model, micro caps, small caps, or potential companies that are new technologies that I have the perception or belief that I understand how they make money. I shouldn't be an expert maybe on the whatever they actually do, as long as I understand deeply how the money is made. And these two fractions that are like the barbelling and the core of the portfolio are companies that I know very, very well and have unrecognized earning potential. So that's basically how it is. And I want to compound capital for as long as possible. So that it is. So if you take, so this part of the portfolio is safe, is in large companies, or I own in that aspect is low maintenance. A part is in Berkshire Hathaway and part is in Franco Nevada, which is, but that thing makes me sleep well at night and allows my personality to invest heavily on the other side as well,
100%.
So on that aspect, yeah. And then, but from what I spend my time are in this aspect, in these areas most of the time, right? And this is what has generated my return. So if I had taken this down, my returns would be bigger, but honestly, I wouldn't sleep the same way, and it doesn't matter. I mean, what is 1-2% points higher? Still, I have a lot of volatility because I have a lot of small companies, so it's not a trade I'm interested to make. But the core are companies that are, let's say, already live in the micro cap camp or small camp, and they have still a lot of recognized earning potential and a lot of growth ahead. So, and these are like the main core where I think they should be like multi-baggers and all. But every investment I make on that side of the portfolio, I should see it at the time of inception as this should be several X's. Of course, I cut them as I realize I've been wrong on my thesis, or management does something different that I lose trust or whatever. But that basically is kind of the
gotcha.
philosophy.
So along these lines, when I was preparing for our interview today, you sent me a few of your investing letters, and I think this is one, I believe it was from 2018. where in there you outline your investing pillars. And I thought this was really fascinating, and I wanted to learn about it a bit more. You know, you've pillar 1 about behavior, and pillar 2, understanding the mathematics of the markets, all real world business experience. So, you know, I'd love for you to describe them a little bit. Maybe we can dig into them a little bit deeper once you. Sure.
And then I need to expand a little bit on part of my background, which I stopped in the story. Sure. So before of that, let me give you an explanation why the pillars. So when I read everything about Buffett and the people who follow Buffett and value investing and all of that, I was curious on why a lot of people, let's say, underperform for long periods of time, and why I haven't seen that much on topic of what on something that Buffett mentions a lot, which is temperament. Okay, and temperament and you know, like, what does it mean? So I went deeply. So let's take this word, because if you take the videos of Buffett, the old ones, it's like the temperamental part is the key of anything on investing. So I said, why nobody has gone deeply on that, what it means. And of course, we know that behavior is the most important thing. Anybody can be super smart, but if we just panic or FOMO everything, we are just going to screw up everything, you know? So I went to that, to behavior and behavior. So sorry, to temperament and temperament. What it is behavior. And what is behavior? Well, is understanding how we act based on different aspects of stimuli, right? And that led me to literally for years understand, read everything I could about neuroscience, the brain, et cetera, because at the end of the day, well, you learn, I can give you a summary of that, is that and this is, I'm just not telling you my opinion, I'm telling you what neuroscience say, is that we don't have free will much. So we have is a Beto power. So it's like a free want, you know? So it's like you can say now, maybe I don't do X and all, but you cannot change that you feel hungry, or you cannot change that whatever you like, women, guys, or whatever it is, you say, I switch willingly. It's not possible, whatever it is, you know, like that's, so it's not whatever we come by, that's it. So for instance, now, if you read something about whatever oil is going to go to 300 and all, you'll be affected by that. And you're going to, you know, like already the subconscious, we already make that decision for you. And eventually you behave like this. So I wanted to understand that, because at the end of the day, we can never control these things, but we can trick them, right? So how I trick them. So let's say market goes down for 7 months, a lot, but you have proper companies made with good decision process, et cetera. And you shouldn't really panic or anything, but then you should do things that trigger these chemicals that your body produces, where, you know, like cortisol, for instance, is the stress that is a hormone that is produced, and it changes your personality, change everything. So if your amygdala takes over the rational part, so you need to do tricks. So if you should get away and do sports for a week because you have a lot of cortisol, just do it. Also, you should be in the bench sometimes saying, I cannot make decisions now because my chemicals are high. That led me to understand that, and to have a set of, I call it Ulysses contracts. Ulysses from when Ulysses was going to, you know, the mermaids, and you know, you had to put them, but you wanted to hear. So this kind of stuff. So to ensure that I'm not taking decisions under different stimuli and all, because I will never control that. It's impossible. We are, you know, mammals. So, but I need to have tricks that I can lower them. So that's why pillar 1, behavior. And, you know, I need to prove that. And it's like, okay, I know what I own. And if I own it, if it crashes, we will still own it. And there is always a risk in the market, which is like, I mean, the whole market goes to zero. It has happened in Russia in 1917, whatever, in Japan, in Hungary and all. That's a risk that will always exist, and that's it. The others, the biggest risk is my behavior. So that's pillar number 1. Pillar number 2 is the mathematics of the market. And that's all what I learned from Nassim, okay? So it's understanding that they are fat tails. So, there are distributions that are not normal distributed. They are extremely stand, which is one single effect can dominate the whole. Example, one investment that you did very well, the company performed, can be 99% of your returns over 10 years of investing, 20 or whatever, like if you invest in that company, that's a positive fat tail. But also a negative fat tail is you are shorting, let's say 2019, you are very smart. Quantitatively, Tesla is not at this price. It should never be. And you're very smart, but you short 10% of your portfolio on that. It went 34, you would be bankrupt, So I don't like to have anything that it doesn't matter how logic says, but if there is a small chance of an unlimited loss on anything, I'm not able to do it. Even my personality doesn't allow me. I wouldn't sleep, so understanding that. So on that means like, I don't leverage. I mean, if I leverage 100% the fund, for instance, 50% drawdown will kill me completely. I don't want that, I don't need it. It's not, if I short 10%, something goes tenfold, you're out. Tesla went 30-fold or whatever since 2019, So these things happen. And look what happened in 2020 with all these meme stocks. You don't, So I understand that. I am away from this, And also I want to be exposed to convexity, to positive fat tails. So that's the point, So that's how the portfolio is constructed in this way. So, and that's why the barbelling part is like, at respect to the unknown, because a lot of things, the majority of things, we don't know how they play, and I want to be exposed. Like I want luck to find me, and if I want luck to find me, I don't do things that like bad luck will find me, which is this concave shorting things. Some people do it very well. It's my personality. I can't handle it. So if I short, I'm allowed in the fund. I put it in the info memo. I have to have a call option, something that caps it, anything unlimited loss or something like that is not possible, And the third pillar is having understanding how business is run. So I met my wife. It was we met at the last bank we worked, and we left there, and we had we opened a yoga studio in Vienna in 2017. We sold it last year. Now with the phone, my wife was relocated and to another city, etc. And I always wanted, when I was in the bank and I had already run done this for as many years and investing, I was parallel, but it's, let's say, investing in companies for long term. So it's not taking decisions every day. It's like now, let's say I take more, but it's very long term. So I realized that in order to be a good investor, I needed to have real investing experience, meaning running a business, what it takes to hire people, fire people, retain talent. That's hard, man. We are here in Excel, happy, a coffee, and we pretend that we know how businesses should be run. So we are always criticizing.
I'm running a small business. It's
how
hard,
stupid
man.
they are on this. How is this? How many of us have actually run a business?
Firsthand, I'm running a small business myself. It's hard. It's really hard.
Exactly.
Yeah.
So with Laura, my wife, we said, well, we go and I want to have a business as well to learn how it works. So we had an adventure in the Caribbean. We decided to not continue. Then we came back to Europe, and Laura loves yoga and all of this. So we opened a hot yoga studio. And man, that was a small business. But look, we had at some point like 10 teachers. We had to interact with accountants. We had to interact with people who help you clean in the studio. Well, there is a lot of clients, loads of clients. The amount of like what I learned by doing that is unquantifiable. Example, we have everything is about people. You have one good person, like things go boom, You have one toxic person, it destroys. It's so concave. It's, it is not only that what this person does bad, but what it does to other people and to the good people. So the effect is hugely negative. So, and how you deal with that, So so I learned that we need to cut anything negative, toxic immediately, At the beginning, it's complicated. And, I learned that the best to do is to give autonomy, to trust the people. It's insane the amount of, and it's hard, it's very complicated. And for instance, I give you an example, something that is very useful for me. When you have the business, let's say, and a client comes and is said to whoever, a review, or to you in the face, or to a teacher, or to Laura, whatever, it's terrible. The class was terrible. It was, so you immediately become defensive, right? It's like, wait, where were you located? It was there, close to the heating, your hot yoga, whatever. Or you try to, that's what your brain does, no? So like, that's what your brain. Very early, I learned that you should shut up completely, listen everything. And it doesn't really matter whether the person is bad and was a bad day and it's just that person. It doesn't matter. You just check what this happened. You review with the teachers, with the people involved, what happened, and you just have this hunger to make things better and to not have that review again. You cannot imagine how many companies are defensive when you tell them that something is wrong. So if a company or employees of the company or anything are just like willing to learn, finding is such a good aspect and on the culture of the company, on management, on the willingness to improve things, so it's incredible. It's incredible all what you can learn by doing that. So, and also my respect to management teams increase exponentially in the sense that a yoga studio, is relatively easy. It's not a restaurant, it's not a company with hundreds of thousands of people. And it's tough. It's really tough, like things happen. And so now I know it's hard. So these guys are doing a very difficult job and we know a little less than them in many things.
So how does that, because clearly,
these three pillars are,
I was going to say, because going through the pillars, it seemed like you spent the most time kind of going through that pillar and understanding that, that real world business experience running, whether it's a small business or, you're just being able to run a business like that in and of itself, you have to be able to take a step back and say, hey, okay, this is not easy. So let's not be so quick to judge. Like, I like that one part that you said in your story, how, you're talking to an investor who wasn't even 30 years old, who had never run their own business. And, they're talking like they're an authority on business running and, criticizing the CEO. And that actually, that came through a lot to me, when I'm, doing the CEO interviews and talking with management, quite a few management teams, especially in the small microcap space, you take your, you want to be critical, but at the same time, also being able to take a step back, like, okay, running these businesses is hard. Look, it's pretty easy to kind of suss out who's the, who might not be working that hard, who might just be a hired gun, just kind of taking a pitch. Yes. It's pretty easy to kind of figure those, but it's the real art and the not even really a science, but the art in picking the right companies is being able to have that proper balance of like being critical, but also realizing, hey, this management team is doing everything they can to make this happen. And maybe there's some other factors that are coming into play. So when it comes to looking your ideal investment or looking at criteria for a potential investment, how do you balance that being critical of management, but also at the same time asking yourself like, all right, are they doing everything they need to do to realize that the vision that you think is, or the opportunity that's there for that company? Look, big question then.
So it's very simple on that, because if you can find information about what management has been saying for years and compared to what they do, is phenomenal, So the problem is happening when you are in the moment and management is telling you this is happening and there is not much to check in the past. But I tell management teams this, like, if you do what you say you're about to do, you're in the top 1% of all management teams. And if you are not, like, consistently, right? Because think this, but if that's not, I don't expect that. But if you say you're going to do that, and things happen because life is hard, but if you come before and say, guys, whatever, you send a press release, I don't know, we're not gonna be able to do X and Y for this reason, before it happens, and come across with this, you're already in the top 10% of management teams, So that is something, like, it's very, for me, like, you need to really evaluate what they say and what they're gonna do. They need to be humble, Humility is very, very key. I have positions on companies that, let's say, I have had, or I really like the business itself and all, and I found a little bit arrogant management, and that is like a level of risk for me that, these people might be overconfident on what they see. So that's all. At the end, this is all people, especially the smaller the company, it's just people. So like here, like, forget about the numbers, like, match what you see in the past. This is like, here is you need to be in the ground, checking with people, checking management, checking with employees, checking with other people who know the company, whatever. So that is how you can estimate your degree of probability of success on that, but you evaluate as it goes.
I can't believe I didn't ask this earlier, but where are you typically hunting, for potential ideas? Do you tend to live more in the small micro nano cap space, or are you looking everywhere?
Well, I look at everywhere, but I spend more time on smaller companies, whether they are small caps or macro cap companies. And yeah, so, and how I like, because they are, I mean, that's the big opportunity, especially when you manage small money. You are allowed to go to places where the big guys can't go. So it's my responsibility to look at these places, and that's my biggest return. Like, my returns have predominantly been because of that. And there is no better feeling to have a company that you take as a micro cap or nano cap, and it's a mid cap or small cap, and it grows like that. It's the best thing ever. And luckily that has occurred. So how you find ideas, if you want to know, well, this is like Flannery, everywhere. It's a network, speaking with people, going to conferences, social media, all the possible investment clubs that you can belong. So, like, be there, talk, check everything that can happen. So it's like have different, like, a watch list, and there are companies that I follow for years that at some point I get it, or at some point they do something, like, I get interested, or the price gets there. So it's a combination of aspects,
Gotcha. And throughout your experience, and especially since opening the fund, I mean, what has been an investing experience that's changed your career, your thought process forever?
Well, it's like, I'm thinking about this a lot, because there is not one single one that hits you like that.
That's fine. If you have five, I love these stories. They're great.
No, it's more like slowly how occurs. So, for instance, I can give you an example. My one of my first positions, and I was managing risk differently by then. Let's say that was the pretty beginning. Look, now I tend to not start positions at cost more than 10%. I have, like, my limit in my mind is 15, but I think that is not really worth it at cost. Back then, I had one position, only one in my life, that I did 30%, 30. And it worked very well. But honestly, that was resulting in the way that, I don't think with the level of experience I had, that was even with 15%, I would have been. So what happened is, like, I can tell you the company, it's MGPI, it's MGP Ingredients. It's a company I really like. And sometimes, so, I own it, I bought it back in some years, and I haven't bought it for the fund. I sold it when I closed the partnerships, and I really like the company. So it's a distillery company. So they have two segments. So they have ingredients and distillery products, meaning they produce gin, vodka, and whiskey, and they age it, and they have their own brands. Back then, they didn't age the whiskey at all, and they sold it to other brands. So basically, you have a lot of whiskey brands that they don't produce their own juice. They source it from companies like MGP. MGP is remarkable because they produce around 9% of bourbon whiskey in the US and around 70% of rye whiskey. So it's crazy, but no one knows about it much. And the strategy was, of course, now because we are the best producing rye whiskey and all, we should age the whiskey, right? And of course, what happens with that? Margins go up. Of course, no? And that's a relatively cheap investment because, you just increase your inventory. You just need to invest in maybe a warehouse CapEx, but it's not a lot. So it's just working capital pretty much tied up, no? And management was with the strategy. The thing is, everything worked very, very well, but because you need to start selling the whiskey around year 4, you don't know what is going on. Of course, margins go up because you start selling a little bit more from age 1 year, 2 years. That happens. But look, what I learned from that, you don't need to really to invest too much at cost. That's really not worth it. You can have extraordinary returns by just being a little bit more humble on what you believe at the beginning. Second, every company setup can be perfect with all the best story, and the real test on anything is commercialization. So commercialization was tough. What I did with MGP, because MGP was so large for me at that time, I really set up something that actually, that's for your answer. That's actually good because that helped me on my discipline today, which is I identify some aspects that if they were to occur, they would mean that I'm probably flawed in my investment thesis or something is risky on that before they happen, not because. So, of course, this is not going to happen because you don't know what's going to happen in the future. But for instance, in MGP, it was very simple. They are aging whiskey. So meaning the inventory should go up every quarter, right? And the moment the inventory doesn't go up, or starts to decrease, and margins don't go substantially up, that means either they are not selling at the price they were supposed to sell, and that means there is a very big problem going on. Or what happens? Well, that happened. That exactly happened in 2018-19. So the inventory started to put. What happened was management. To me, that's my read. It was too confident on what it was going to happen with commercialization and all. Now the company is doing really well. They have a new CEO and they bought Lux and all of this. But that happened. And when this happened, I really, really trimmed the position and eventually I sold it all completely. And stock went down a lot. Management was replaced. But that means there is aspects that if you could identify them, have them ready, because the moment they occur, this should be like a flag to you. Maybe there's something wrong, and I do that across everything. Of course, there are lots of things that you cannot identify in advance. This is life, but there are some that you can, and MGP is an interesting example because it's this type of companies that, in the numbers don't tell you anything, but they had at the time. And I mean, this unrecognized earning potential, which is all the whiskey that they will sell, age, or potentially create a brand. They did create brands, and I think they're going to be really successful, and I hope so.
Gotcha. And just for full disclosure, I know you said you trimmed the position, you got out of it.
I don't have MGP today.
Okay. Oh, okay. Just curious.
No, I don't have the fund. I never bought it. I mean, the fund was open just now. It just from the partnerships to the fund.
Gotcha. But I got to tell you, that's a really good example of it's almost worth it to look at ideas, not from, you can make an argument for anything that you want to potentially invest in for the growth prospects. And this is the TAM and the addressable market, all that good stuff. But the part that we don't think about enough, I would say on the most part, is not just your downside risk in general, but really digging into your downside risk. And it almost makes you feel more comfortable in your investment if there are identifiable downside risks. Like, listen, everything is on the same playing field for things that you just can't identify, like COVID. None of us saw COVID coming, right? That was a complete black swan in many different ways. I mean, unless you're, an infectious disease expert and we're following SARS since 2005, right? Other than that, but and I don't mean to. I'm not trying to make fun of it or play with it, but I'm using it as an example of like it's so much. I'm sure. I mean, listen, I'm just asking from your perspective. It probably gives you much more comfort when you're looking at a potential idea and saying, "Hey, I can actually identify these risks right here," versus just some kind of nebulous, like, "Oh, there's probably risks associated with it."
Yeah, the important thing exactly is identify them and really act if they occur. Like saying because at the end of the day, every position deserves a size. So if you have the largest position, you have these risks identified and they happen. It doesn't deserve that size, like it needs to be trimmed. So these are the aspects, because, this is why it's so beautiful investing with fundamentals, in the sense, because it's like what is happening at the company level should drive how much you own. I love adding up, It doesn't matter that the stock price goes up, because many times management executes better than you expect. So the risk-adjusted price is lower, right? Because so that is. So you need to act. So you definitely need to act. And many companies, I substantially trim if something happens, because at the end of the day, it's just an information to you if that something is happening. Or also, I have, for instance, situations that I don't even identify at all, and they happen and they are negative. They are intrinsic to the company. I never act on these situations, because that means, the risk of me being wrong has gone up. That's it, So therefore, this is not like blind. This is not a macro thing or whatever, that everything goes down a lot and then you can act,
All right. So Jean Philippe, we're pretty much there. So
excellent.
I wanted to close out with my last question is, we went through a number of different experiences that you've had in your investing career, but what advice would you have for new investors that, that helped you a lot?
So you could, and that's when I will recommend these 3 books.
Oh, okay.
That's what I've brought them. So first, I assume these are guys that are already investing, no? So think everything probabilistically. So there is nothing that is like investing or really looking into it, but so they know about it, they know how it works, so think probabilistically. Don't assume anything is 100% true, and be like, the truth of things is always in the middle. Nothing is black or white, so try to have balanced views about anything. It's never healthy to be perma-bull, perma-bear on anything. So if you are predictable on how you're going to think, that's a bad sign, So pay attention to hidden risks. The risks, a casino, for instance, main risk, for instance, a small casino in a shop, you can say somebody winning everything. That's not happening. It's mediocristan. It's a normal distribution. That's not happening. A main risk would be the manager. So let's say you are the owner of the casino, whatever, you buy the shares. Is the manager, I don't know, having a sex scandal, misbehavior with the clients, and then they have to shut down. That's not in the risk metrics of that. So be careful of hidden risk, and for that, allow your portfolio for this to occur and for you to be wrong, and cut as much noise as possible. We are in an environment where any single opinion goes there exponential. It's very, very tough to get valuable information. Is plenty. So just cut the noise. If you have that discipline, it's the best. And I bring 3 books, which are not investing books, which are phenomenal for investing. So this guy, this is The Mission, The Man and Me by Pete Blabber, I don't know how, is absolutely great. It's well, an ex-military guy who explains how to be on the ground is helpful, and not making decisions when you don't really know the context of things is phenomenal. Incognito, this is a neuroscience book by David Eagleman. I have read everything he has written in books. Explains a lot about how we make decisions from a neuroscience point of view, and it really, really should be read by any investor. You see how fragile we are to be influenced by many things, and with that you can apply some tricks depending on your personality. And another one is Scott Adams on how to fail at almost everything and still win big. It's a phenomenal book on his experience, and I mean, I want to spoil it. This is really good. So that's it. That's I don't know if it's helpful. It was helpful for me. Hopefully, it's helpful for anybody, for somebody. Bob, thanks.
I think I'm definitely going to pick up those. But I actually haven't read all three of those, so that'll.
Well, go for it.
Don't worry, it'll take me. I'm the slowest reader ever. It'll probably take me 10 years to read all of them, but I'll get through them eventually. So Jean Philippe, where can our audience go and find more information to follow you, read your insights, see the fund? Where can people go and follow you?
I haven't been very active lately on Twitter, but I have a Twitter account. I was very active before. Just now with all this noise, it's complicated. But there is JP Tissot, like JP Tissot, like the watch, and one number at the end, one. And LinkedIn, Jean Philippe Tissot. They can find me. That's pretty much, and then they can message me there. And I don't have a website or anything yet, so we'll eventually do it for the phone and everything. But yeah, these two are the main ways to find me for now, I guess.
So on Twitter, I just have to look it up, make sure it's Condorito. Is that?
Yeah,
that's
you?
Correct.
Okay. Correct. Condorito. I was very late on Twitter, and I read Condorito a lot. It's a cartoon from Chile, which we read in Colombia, and I love it completely. It's phenomenal. I have some there, and I just put a picture of one character there that never appears, and I put Condorito, and we go like this. Well, now I put it there. I actually changed the handles lately, so maybe I need to change that at some point. But
no, that's good stuff, dude. Well, listen, Jean Philippe, thank you so much for joining me today. I really do appreciate it. Good luck, stay safe, and I look forward to our next chat.
Thank you, Bobby, for inviting me. Pleasure to be here, and enjoy. Ciao.
Ciao. This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap Podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast.